The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, this is Mark Maurer. Welcome to Low Load Insurance Services 9th webinar of 2011. The scrolling slides moments ago filled you in on CEs and other information. If you missed any of that, please be sure to visit the education pages of our website for more information. Today's presentation is about policy reviews and how they can help ensure your client's existing policies are still performing to suit their needs. It will last about 50 minutes with a break for questions at slide 17. Those questions will come from ones submitted online, so please submit your questions online as we go through that point. Then at the end of the presentation, we'll take questions from raised hands on screen, opening the phone line for that individual only to avoid unnecessary background noise. Remember, to ask verbal questions, you must use the audio PIN number provided to you when you logged in. This webinar is being recorded and will be posted to our website within a week. And I have the pleasure of introducing presenters Judith Maurer and Keith Maurer. Judith created Low Load Insurance Services in 1998, setting new industry standards with a full range of insurance support services that feature web-based quote requests and fast response times. She based her business on the principle that her client is the advisor rather than the end user, and that LOIS is an extension of a fee-only financial practice with the advisor an intricate part of the insurance planning process. She expanded the products available to advisors and hired specialists in each line. LOIS now serves as a source for term disability annuities, hybrids, and long-term care, as well as low-load life insurance. She is known as a tireless industry champion, especially skilled at overcoming underwriting challenges by pairing the right policy with the right person. She and her team avoid the one-size-fits-all approach. Keith co-founded Tampa-based Fee-for-Service Incorporated in 1984. Fee-for-Service was a national firm specializing in marketing low-load life insurance. When GE Capital purchased Fee-for-Service in 1995, Keith remained president until his resignation in 1998. Since leaving GE Capital, he has served as a product distribution strategy consultant, that's a lot, to several well-known insurance companies. He is also an in-house consultant for low-load insurance services. And in addition to his popularity as a speaker, Keith is also a contributor to the financial press, including life insurance selling, Consumer Reports, Forbes, Money, The Wall Street Journal, The New York Times, Business Week, and Financial Planning magazine. And he contributes to the morale at LOIS with his contagious laughter and sometimes good jokes. I'm sure you'll get a taste of that this afternoon. So let's get the webinar started. Judith?
Hello, everyone. This is Judith Maurer. I hope you have a chance to get a cup of tea or a cup of coffee and aren't just logging in and then going out to walk the dog. We're going to have some fun today talking about policy reviews. And many of you who are CFPs have told me that while the CFP classes are very detailed, the class on insurance is more of an overview. It tells you a lot about how insurance companies work and how different products are designed, but it doesn't teach you everything you need to know to do a policy review. And I guess you could drop everything and learn everything you need to know when your clients bring you policies, but we don't believe that's the best use of your time. I've heard that time is the new currency, and we hope you don't have to spend yours on insurance issues. So what do you do when your client brings in a shoebox full of old policies? Perhaps they even stopped at the bank on their way to your office and opened their safety deposit box and pulled out all those policies, some still in the original plastic bags, and brought them to your first interview. They plop them on your desk, and then they say to you, I'm trying to move the slide. They say to you, I have these insurance policies. Can you tell me what I have? Can you tell me if it's any good? Can you tell me what I should do with it? These are three important questions, and today we're going to talk about how to gather the information to answer these questions for your clients. Our focus will be on life insurance, but some of the information applies as well for disability policies, long-term care insurance, and annuities that your clients might have. So, if your clients don't know where they're going, all roads and no roads will get them there. Are any of you familiar with Dora the Explorer? I'm learning a lot about Dora now because we have grandchildren, and sometimes that's what they watch before they go to bed. So what does Dora need when she's getting ready to go to a destination? She needs a map. And I have all this help in the office. So we think it's the job of the advisor to design the map. We'll help you along the road to the destination, but the advisor needs to design the map. You need to ask your client, is it still right for now? Or was it right back when it was purchased and not right now? Is it a useful design? Does it still help you get you toward your goal? So let's talk first of all about term insurance. It's amazing how many times people have term policies that they haven't looked at for years. They don't remember even why they purchased it. So let's talk about some of the things, the questions that you need to ask when you speak to your clients about their term insurance. Why did they buy it? It's likely they don't remember. Do they still need it? Is it still the right amount? How long does the term premium stay the same? Those are questions that are what helps us get down that road toward our destination. We recommend that you find that out first and then send your client to the preliminary health and family history form that's on the website. Click on quote request plus preliminary health, and there it is. Your clients can fill this out. It's better for your clients to fill it out because it's very hard for advisors to guess their client's height or weight or whether or not their parents are still living or what kind of medication they might take. It's also good to see the policy spec pages for the term policy if your clients have that. That's usually the first 4 or 5 pages that have the rows of numbers. It will tell when the policy was issued and what kind of insurance it is, how long the term duration is, and perhaps the underwriting category. There's also riders available on term insurance, and sometimes people have a lot of riders that might be like a waiver of premium rider or a rider that allows you to get death benefits if you're terminally ill. So see if those riders are available as well. And again, on our website is a form that will give you permission to share this information with Low Load so we can have a look. There's also, what if your client says, I've got this term policy, I pay the premium every year, but I simply can't find the policy. Also on the website, there's a term verification of coverage form which they can use to send to the insurance company to find out what kind of term they have. All right, let's talk about permanent insurance. Well, just like with term insurance, the need and purpose of the insurance when it was originally purposed is very important. Why did they buy it? Is it still needed? Is it still the right amount? Another helpful thing is the most recent annual statement. This will verify the face amount of the policy, for example, and who the owner is. Then again, another thing we need in order to do a policy review for you is the permanent health and the preliminary health and family history form, which again is on the website. And an in-force illustration is something that can be very useful. One of the things that advisors asked us to do, which we now have on our website, are sample letters so that you can simply have your client personalize that letter and send it to the insurance company. And if you'd like to know the customer service fax number for that particular policy, just give us a call and we'll look that up for you because that can save time as well. The last thing we need, of course, is permission to share that information with Low Load. And that form is also available on the website. So now that you know what kinds of things need to be gathered, I'm going to turn the microphone over to Keith Maurer, who will talk to you about what happens if your clients are healthy, if they're not healthy, and whether they need and want insurance or whether they don't. And he'll give you some great ideas for how to proceed with that.
Thank you, Judith. This is Keith, and we're going to go over today, excuse me, some of the things that I do and people here in the office do when we ask for policy review, when you ask us to do policy reviews. And as Judith said, we sort of are going to carry this through in 4 quadrants. Now remember, from what Judith said, at this point in time, we have current information, and we know the need and the purpose of the insurance. So, and we know the health, the general health of the person. So sometimes we do this a little blind, as you know, and things sort of surprise us, but we're going to assume right now we have all the information that Judith just talked about. So we're going to start right here, in this quadrant right here. Yes, they are healthy. We know that these people are healthy, but no, they really don't need or want the life insurance. So what do we do? Well, here are some options that we can do, and I'm going to take these on one at a time. What if you don't need or want the insurance, but you're healthy? Well, one of the first considerations, of course, is just if it's a cash value contract, which would be variable life, whole life, universal life. If it's permanent, we can just consider surrendering it. Sometimes the most straightforward is the best answer. But before we do that, what I would try to do for you is determine if it's a taxable event or not. So the cost basis of a life insurance policy is the premiums paid for life insurance, not the premiums paid for riders, if there are any. But so not necessarily just the premiums multiplied times how many years they've paid it. It would be the premiums paid just for the life insurance. So, but most of the time that's pretty much the same number. If the cash values exceed that cost basis and you surrender it, there is a gain, and it would be taxed as ordinary income. Or if the cash value is less than the basis, there's a loss. But good old Uncle Sam, they get the longs but not the shorts. If you have a loss, you can't use that loss. Matter of fact, I'm going to talk in a few minutes how we can use that loss, but the only way we can use that loss is by bringing it into another insurance product, not necessarily life insurance, but another insurance product to use that loss. Next, what can we do? Well, we may consider a 1035 exchange. Now, you say, but we don't need or want the insurance. Well, we're not going to do an exchange into life insurance. We may consider putting it into a deferred annuity. If the real reason or one of the reasons they owned permanent insurance was because they were sold on the idea that this is a good, quote, investment, end quote, and they like the fact that the cash values grow on a tax-deferred basis, which is true, but also this is true on a deferred annuity. Now, let's go back up to the right here and assume that it is this position right here. My little thing isn't writing. Why isn't my little thing writing? The cash value exceeds the cost basis, meaning that there is a gain. Well, by going into a 1035 annuity, a deferred annuity, we would postpone those gains, and therefore there would be no tax. So just pick numbers out of the air. It's a $100,000 policy, but its cost basis is $70,000. If you just surrendered it, you have to pay income tax on $30,000, and you're going to lose much of that money before you can turn it around to invest it. However, if you take it as a 1035 into a deferred annuity, then you would have the whole $100,000 growing on a deferred basis. And of course, we would consider a no-load deferred annuities if that works. But what happens if it's in a loss position? You say, well, if I just surrender it, there's no tax, so I can just go in and invest that. That is